Well, the Sub-Saharan Investment Banking Confidence Index rose to 83 points in the first quarter of 2013. That's compared with 79 points in the fourth quarter of last year on high business volumes and flat costs that helped lift profits. However, income fees have declined by nearly 64%. For more on the latest on what's shaping investment banking in Africa, Miguel Melo Azevedo, Head of Investment Banking for Africa at Citigroup. Thank you very much for joining us, Miguel. So let's just firstly talk about Citi's business in Africa right now. I mean, talk to us about where you're making the most money. What are your key revenue generators?
Okay, let me start by saying that Citi does a lot of business in Africa other than investment banking. I will be focusing on the investment banking side. And I think you have mainly three products in our template. The first one is what I would call debt raising product. And there we see a lot of activity in syndicated loans, and we are starting to see activity in capital markets based activity. We see the sovereigns already printing. Now there are news that some other sovereigns are coming to the market pretty soon, and we also see corporates coming to the market, which is the natural order.
Yeah.
We have seen banks in Nigeria. So that one is very active and very busy. The second business line, I would say, is M&A. And by M&A, I mean raising capital for companies with strategic partnerships or actually selling the company to an international player. That is picking up. We are seeing a lot of interest from strategics to come into Africa. We are seeing a lot of interest from private equity firms, both Africa-based and London-based, mainly London-based, to invest in Africa. There are a few billions out there earmarked for Africa. So we see that as a leading indicator of deals going forward.
When you say a few billion, I mean, it's hard really to gauge how much money, but is there a substantial amount that is still needed to be invested and ready and waiting?
Oh yes, I think just on the private equity side.
Yeah.
I think there are certainly more than $2.5 billion ready to be invested in Africa. And this is not amongst too many players, just a few players. So the overall number may actually be bigger. The challenge, though, is to find the right opportunities for this money to be deployed. We all hear and we all see growth opportunities in Africa, GDP growth of 6–7%. But when it comes to find those opportunities where people can actually invest and play the game, if you want, there are not that many.
What are the problems, though? I mean, what are the challenges? Is it the returns they want?
No. I think the returns will be there. It's just there are not enough companies. And if the market is booming, people don't want to sell. But other people want to sell, and that's why we are starting to see companies coming to the market. And I think that you will see more and more these investors backing good management teams across Africa. Because one thing is certain, these investors, when they come to Africa, they need to invest with African management. They need on-the-ground presence, on-the-ground know-how. And that's why it takes time to find. And right now you see deals being priced at very high multiples.
Give us an indication.
Well, I think I will not give you an indication on that side. But
I mean,
you will see very soon.
Certainly a lot bigger than what we're seeing in the rest of the world, because that's been an indication for private equity, is that the valuations have been so low.
Yes, I know. These days, I think you will see deals in the 10 to 12 times EBITDA level, which is really nearly unreal. The explanation is very simple, though, is very strong growth. And if you are growing your business at 30% in sales, you may actually be growing at 50% in EBITDA. So the multiples next year actually look much better. So there's very strong growth. There's an availability of capital, both debt and equity. And the cost of capital is at historical lows for Africa, I would say.
Yeah. Equity raising, what about that? Where's the continent when it comes to that? Given, of course, most of the markets here, capital markets, stock exchanges are still very underdeveloped.
That's correct. And all this is outside South Africa. South Africa is a different...
Yeah, completely different.
So all my comments, and actually I work on Sub-Saharan Africa and North Africa, not South Africa. And that's the third pillar of investment banking. And typically is the last one to be active. And right now you see activity picking up in Nigeria. Last year, the average daily traded volume in Nigeria was in the region of $17 million. This year is in the region of 25 and growing. So you see liquidity starting to be there. That's very important for investors. Other markets, you don't see that yet. I think you will only see that when you get large corporates to come to the market. In many of these countries, they have been very centralized economies. There are many companies that are state-owned, utilities, power, banks, things like that. When those come to the market, that's when the market will gain liquidity. That's when buying shares will become popular. The people on the street will buy shares. That's effectively what happened across the globe, and it's starting to happen here.
What is the model that Citi is having to take in Africa right now when it comes to deals? Because the size of deals in Africa are generally not as big as the ones you see in the US and Europe and the rest of the parts of the world. So, I mean, what are the typical average deal size here, and how do you then approach that differently?
Yes, no, definitely we have to have a different approach. If we apply the same approach, we are out of business, on day one. So our approach is really to look into quality of transactions rather than size. And if you have a company today that is worth, say, $100 million, that's in international standards, it's a small size. But if that company is growing at 30% per year, and has been growing, and has the skills to grow, that company very soon will be a $300 or $400 million company. So you need to get in early. And that's what I think Citi is doing, taking advantage of having a footprint on the ground through our corporate banking partners that are in 15 countries. So we can source these opportunities. So
taking a leading position, kind of first move advantage is what you're going for?
Correct. That's absolutely correct.
How competitive is it right now in investment banking?
It is getting very competitive, and you just open the newspaper, the FT or even the Wall Street Journal, and you see a lot of announcements of people moving into Africa. And you also know that in Europe, namely, activity is not very strong, so there's a tendency to move resources. I would say there are four groups of banks, and the first one is local investment banks, and you have this pretty much in every country in the continent, and they are very active. They tend to be working on smaller transactions. The second group is Pan-African banks. I'm talking of Standard, very big competitor of us in the continent, now that they are even more focused on Africa. Nedbank, RMB, and out of Nigeria, I would mention UBA, for example, or even Chapel Hill. The third group would be the global banks that have footprints in the continent. And here I would include ourselves, Citigroup. I would include Barclays, StanChart, HSBC, maybe to a lesser extent, and all very active and all really fighting for business. And the fourth group is the big global banks that are not in Africa. Goldman, JP, Morgan Stanley.
But they have a presence here in Johannesburg.
Well, there you go. Johannesburg is a different game. And I think it's more South African oriented.
Thank you for joining us today. Appreciate your time.
Thank you very much.
We have to leave it at that. That, of course, Miguel Azevedo, the head of investment banking for Africa at Citigroup.